How to make money in the stock market. So you want to make money in the stock market but don't know where to start, need the confidence to take action, or you're trying to figure out how other successful investors are making money. We'll look at the two easiest ways investors have been able to get rich by investing in the stock market. Best of all, you can do this also. Also, keep watching till the end of this video where I give you 4 stocks I'm currently invested in. Okay, the two common ways investors make money in the stock market are with capital gains and dividends. Let's take a look at capital gains. When you have your money invested in the stock market, the value of this asset can go up and down. When your money, also called your capital, increases in value, it's called a capital gain. And when it decreases in value, it's called, you guessed it, a capital loss. As long as your money is invested in the stock market, it's unrealized. It only becomes realized once you sell your stocks. Let's look at an example. You decide to buy 100 shares of Nike stock, currently trading at around $65. Without factoring the trading fees, you end up paying $6,500. This is also what your Nike stock capital is worth. A few days go by and you decide to check on the stock's performance. You notice that the Nike stock price dropped from $65 to $61. So your capital also dropped in value from $6,500 to $6,100. You lost $400, which is your capital loss. But you thought about this video and remembered that this is an unrealized capital loss because your money is still parked in the stock market. You decide to wait it out, and after a few more days the stock price increased back to $65. This makes you extremely happy to be at break-even point. After a few weeks, it hits $72. You have just experienced your first unrealized capital gain and decide to sell your Nike shares. You sell all your 100 shares at the current stock price of $72. So you just received $7,200 in your cash account. Transfer fees not accounted for. By selling, you turned your unrealized gain into a realized capital gain. You just made a quick $700 without doing any physical labor. Now you still have to pay taxes on your capital gains depending on which type of investment account you were using. This quick explanation is how many day and swing traders make money, and even long-term investors. They analyze stock charts by looking at indicators and patterns to decide when to buy and sell stocks. Now you made a quick $700 with 100 Nike stocks. But if you bought 1,000 shares, your profit would have been $7,000. If you have the money to spare, don't mind taking any risks, and have idle time on your hands, you could make a pretty penny quickly. Especially if you invest in the very risky penny stocks out there. The second most common method investors make money is with dividends they receive from dividend-paying stocks. Let's stick with the Nike stock example. So you bought 100 shares at $65, but instead of selling for a capital gain, you decide to hold onto those stocks for 1 year. Nike has made 4 dividend payments of 18 cents per share for the year. So with your 100 shares, you received $18 every single quarter, or $72 total. The great thing about dividends is that these payments get deposited in your cash account, or you can also reinvest them to buy more whole or fractional shares. These whole and fractional shares also end up paying you dividends. There are also disadvantages to dividends. The money you receive from dividends are mostly a lot lower than you would receive from, let's say, a capital gain. Dividends are also for the long term. They are not a get-rich-quick strategy. Also, many companies are flaky with their dividend payments. Some constantly cut their dividend payments, and others completely halt paying dividends during times of financial hardship. There are also companies that never increase their dividend payments or increase it after years of paying the same dividend amount. That being said, I like dividend-paying stocks, but only from specific companies. I do the fundamental research to see which companies are worth buying, and I also analyze their dividend payment history, especially during times of economic turmoil. Because companies that can still pay an increasing dividend during a stock market crash are companies to keep an eye on. In my upcoming videos, I'll show you how I analyze these companies using fundamental analysis and when I decide to buy their shares using technical analysis. So without further ado, I present you 4 stocks you should have on your watch list. Number 1. Nike. This athletic apparel retailer sells its products worldwide, with a focus specifically on athletes. However, the brand is still so immensely popular that non-athletic types also wear Nike apparel. Their biggest money makers are their footwear products, with their flagship Jordan brand always selling like hotcakes. Number 2. PepsiCo. Many consumers think that the Pepsi company only owns the beverage, but they also own popular brands such as Frito-Lay and Quaker Foods. Number 3. Coca-Cola. The Coca-Cola company owns many additional brands besides the iconic Coke brand, like Minute Maid, Vitamin Water, and Powerade. And number 4. Realty Income. This real estate investment trust has tenants such as Walgreens, FedEx, and LA Fitness. They also pay a monthly dividend. So there you have it, guys. 2 ways to make money in the stock market and 4 stocks you should keep an eye on. Let me know if you enjoyed this video by hitting the like button. Don't forget to leave a comment and subscribe to my channel if you haven't already. I'll catch you in the next video.